You like this weather? You're a skier, right?
I was a skier, but I had
I know you got
two
you got
ACL
hurt.
surgeries. So I'm only skiing from my mind. It's an imaginary skiing now.
Yeah, virtual.
I'm too old to have another injury.
Somebody asked me recently if I wanted to go skiing. I don't know how to ski. It's too late. I'm going to die.
No, it's not
Can't
too late.
learn. No, my body. I'm going to tear something too.
I mean, if you like rollerblade or ice skate. then
No,
it's-
your instinct is right. I was at dinner with Rob Sechin in Florida like 10 days ago, and he was telling us like stories of his ski injuries. Like this guy, he is beating the shit out of himself.
Yeah,
Like he's got like titanium all over his body.
he's kind of bionic. He has like a couple fake knees.
He's almost an Optimus, I told him. Like an Optimus robot. He was saying he was a mogul skier. I'm like, what? I know what a mogul is. What does that mean? He's like, just bumps the whole way down. Well, who the would do that? That sounds like the worst part of skiing.
Skiing attracts like some really extreme risk takers.
So he goes, oh, JB, I love it. I love the moguls. I ski the mogul. You know,
Isn't he from Pittsburgh? Where's that accent from?
I don't know. It's amazing.
He did.
Though.
He grew up in like Pennsylvania. So
But that accent is not from Pennsylvania. That's not a Pennsylvania accent.
He's like, JB, you know I love the moguls.
Yeah, it's like it's a little bit like,
It's like a
maybe he
Southern
watched
drawl.
like Fat Albert growing up, you know?
What is this? What is this?
What?
Your
My laptop's at JFK.
No. I know that. I mean, your
So that's what's going on?
No. The actual color of your icons.
Oh, that's dope.
I've never
right?
seen that.
Yeah. Stick around, kid.
I like
Learn
it.
some shit.
Stick
around. Keep your eyes open. You never know how I'm going to surprise you.
I hit the speaking of Apple, whatever. I hit the emoji button, or like the emoji to like create yourself,
Mm-hmm.
and Apple's AI created me, but like I have like lots of hair. Like it looks nothing. I'm a
see
bald
it?
guy. Like how is that?
You must have bought the premium package,
Yeah.
right?
I guess. All right. Here's the
0%
picture.
chance.
That I made.
0%
Check
chance.
this out.
Yeah, I want to see it.
I mean,
Oh, it's so
It's
cute.
like it's the
Dude.
meme.
It looks like your son, dude. That looks like your kid. Let me see it.
what in the world?
He said that's good.
All
But
right.
you're like in a bubble. They put you in like a.
Zoom in.
However, we spoke at an event yesterday. Hard to believe it's yesterday, and they made those Funko doll. What are those called?
Oh,
Nick?
Funkos.
Funko. So they made dolls of us, me and Michael, and mine had a full head of blonde hair,
Mine is bald.
and Michael's was like
All right.
literally baby
Dude.
Stewie from Family Guy.
That is reminiscent of you.
AI is going to take all of our jobs? Come on.
Not the illustrated.
Come
part.
on.
But that's like a meta AI. Remember how like they have the meta world or
Am I
whatever?
too loud? Am I
the
too
metaverse.
loud on the board?
Meta-
Metaverse.
yeah.
That's right.
Okay. All right.
All right.
Let's do some pods.
We have a full house. I'm a little
Yeah.
bit nervous. Big audience.
Did I get to meet everybody? Who else? Hi guys.
We have an Alexa, an
you-
Emily.
Are you guys all Fundstrat? Wait, from what is it called? Will you hire my daughter? She's a PR major at University of Miami. She needs an internship.
Yeah.
All right.
Josh, do you know Ron and Sana?
Yeah, of course.
Emily and Sana.
No, really? I love your dad. How's he doing? Okay. All right. He's one of my faves. So say hi for me. Say hi for me. All right.
All right, let's get it started now. Claps coming in.
All right.
Alrighty, the compound and friends.
We're about business right now.
Today's show is sponsored by Franklin Templeton. Let's talk munis, because for many investors, taxes are a big part of the return story. And municipal bonds generally provide interest that's exempt from federal and, in some cases, state income taxes.
That's right, Michael. But the muni market isn't simple, and index strategies can fall short. One solution, active management. Enter Franklin Templeton. They're one of the largest muni bond managers in the market and offer more active municipal bond ETFs than any other manager, including national muni ETFs and 7 active single state ETFs.
Put the power of Franklin Templeton's active muni ETF lineup to work for you. Visit franklintempleton.com/muni ETFs.
Before investing, carefully consider a fund's investment objectives, risks, charges, and expenses. You can find this and other information in each prospectus or summary prospectus, if available, at franklintempleton.com. Please read it carefully. All investments involve risk, including possible loss of principal.
Franklin Distributors, LLC, member FINRA SIPC.
Ladies and gentlemen, welcome to the world's greatest investing podcast, The Compound and Friends. My name is Downtown Josh Brown. First-time listeners, last-time listeners, whatever it is. I'm here with my co-host, Michael Batnick. Michael, say hi.
Hello, hello.
You guys, we have the GOAT in the house today. Every time I see this on the calendar, Tom Lee is coming to town. I get so excited. You know how excited I get, right? Okay. All right. Tom is a co-founder, CIO, and head of research at Fundstrat Global Advisors. Previously, Tom was the chief equity strategist at JP Morgan. He is best known for his data-driven, often bullish market outlook and for being an early high-profile advocate for Bitcoin, Etherium, and other digital assets. Tom, what more can I say? It's pretty good, pretty succinct bio, right?
Yeah,
Okay.
Thank you.
All right. Are you bullish still?
Yes.
'Cause I heard you at the start of the year kind of being like, yeah, we'll probably get a correction in the first quarter. Did you say that?
Well, we just think 2026 will look like last year. So our base case is we are strong in the first part of the year,
Okay.
but then we have a drawdown that feels like a bear market,
Okay.
but we'll rally strongly. And I think at least a 10% gain, maybe more now.
So we had that. How deep was the drawdown last March?
It was 20%. It was a bear market.
Okay. And that did that start from an all-time high or not really? I forget.
Yeah, it did.
It did. So it was rare.
Yeah.
But maybe that's why it recovered so fast, because it wasn't based on anything other than words.
That's right. If you have a decline and it's not leading to an economic downturn, those declines are usually V-shaped and symmetrical.
Okay. Do you think that this year, we have one every year. You think this one might have the potential to be based on an economic decline, or probably not?
If I was guessing, because it's like I'm just guessing
No,
in
of
the
course.
future.
We're all guessing.
Yeah.
Yeah, we're guessing.
what we're doing
They're
here.
educated guesses. That's
Correct.
what we're doing.
Yeah,
Okay.
it's educated guess is that it can be a policy shock, like something coming from the White House, or the market testing the new Fed,
Okay.
or both. But that is probably like last year then. So it's a market decline because people take risk off the table, but it's not really an economic downturn. So we end up recovering really
We got
quickly.
two policy shocks in the last 5 days. We got the health insurance shock and the credit card shock. 10% cap on interest rates for credit cards. I didn't even get a chance to see what he said about the insurance companies. I just assume it's not going to matter and never really happened. But what was that about? Do you remember? It was like 2 days ago.
Oh,
Yeah,
pay
it's
attention to that.
it's
I
a
have no idea.
it's the reimbursement rates for Medicare
Yeah.
and Medicaid, and people were expecting it to be 6 to up to 9%,
Right.
and it's only 0.9%. It's actually these are consumer friendly shocks.
Yeah, that doesn't sound like the type of thing that would derail the economy. It just sucks if you own UNH.
Yeah, so if your health insurance bad.
Okay.
Can I interject and say one thing? So on this show and on every show, we talk about what's happening with opinions about what's going to happen in the future. That's what we do, right? I was listening to, the book by William Goldman, Adventures in Screen Trade. There's a line that's always quoted from that book. Nobody knows anything. Like that is, so William Goldman wrote Princess Bride. He was a screenwriter and a novelist. And during the book, he said it's 1982. And literally the whole point of the book is nobody knows anything. People that are making movies don't know how the audience is going to react. Like nobody knows anything is the whole point of the book. He said, I know we have 9 months left in the year, but there is no doubt in my mind that E.T. will win Best Picture. It was 1982. He goes, I don't care. Steven Spielberg, E.T.'s going to win. Gandhi won. So all of the stuff that we're talking about in the future, we're all doing the best we can.
Yeah, that's right. It's just a guess. The future is uncertain. I agree.
It's true.
What do you do to stack the odds, though, in your favor if you have to have a view and you have to make a call, or people are relying on you to, all right, we get it, it's unknowable, but like still, what do you think? How do you stack the odds in your favor to be right more often than you're wrong? And you're the right person for me to ask this question of because you are right more often than you're wrong.
Well, yeah, thank you.
You're
Which
welcome.
means I've
No,
been
you know
guessing.
that.
Yeah.
I feel like we say that every time you come on. You are due for a cold streak.
That's why he has an entourage here. If you were wrong about the bull market the last 3 years, be nobody on this bench hanging out with you.
Well,
You know how that's how Wall Street works.
Well, I'd come in my McDonald's uniform.
Alright,
Tom, can I tell you?
Okay.
I just spoke to a young man.
Wait, I didn't even get an answer to my question.
No, hold on. More flowers. I spoke to a young man last month, and he mentioned how Tom is always bullish. I said, listen, you don't get it. You're a senior in college. It's easy to be bullish now, but there was a time, young man, not so long ago, when it was not cool to be a bull, where everybody was bearish, and anybody that had the nerve to make the bullish case was ridiculed. And you have not been bullish since 2022. Like, you've been right the whole way. And I think that's a big part of why you have commanded a legion of followers, is because every time the market dipped, most people came out and said it's going to get worse. And you were like one of the lone voices who consistently has said, it's probably going to get better. So you're right.
Thank you.
So how do you do everything you can so that when you are making a call, it's got a reasonable shot at being right?
Yeah. This is not a great analogy, but I'll explain it and then I'll explain how we do it. But let's say you're in your house, but the lights are off completely, but you're feeling your way around. And then so you feel like something fuzzy and then you figure out it's your living room. Or if you hit your foot on a corner and then you're in the kitchen.
Right.
That's what I think trying to navigate markets are like, because we don't really know where we are at any moment, but then you try to find what gives you situational awareness. And we do that by doing a lot of cross-market analysis. So we take a lot of cues from volatility or what credit markets are doing or commodities, and that informs us of what the state of the equity market is. But a lot of our work also is trying to look at, with this current snapshot of all that, where does it place us? Does it put us back into 1950 or 70, or is this, Hong Kong? And so we're trying to place ourselves.
That seems to be really important to you, the point in the cycle that we're at. You seem to pay a lot of attention to that. Is that something that you learned from someone else, or is that something that you just figured out over time? Hey, this is the real signal. This is what really matters.
I don't remember where I heard it, but I remember hearing a few things in my early years. One was, don't fight the Fed.
Yeah.
And I think that's important. Another is...
Who's that, Marty Zweig? Who is don't fight the Fed?
Ronald Reagan.
Yeah, it was probably Ronald Reagan. Okay, go on.
Yeah. Or it could be Uncle Martin. You remember that movie with Martin Short? He says,
Right.
Don't fight City Hall.
Right. Okay.
But the second is demographics are destiny. And I don't remember where I heard that. I could have heard it in college, but when I did wireless, that was a lot of the work I did when I was a cellular analyst, was really building cellular penetration models based on what I call vintaging, tracking what young people did. And then we figured when they become adults, they're going to control everything.
Right. Okay. So based on those two things, and you're feeling around in the dark, where are we? How would you describe the position that we're in now? Because most people would say, what goes up must come down. It's been too good for too long. Valuations are stretched, blah, 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 blah. All the whole litany of things. So what would you answer that, given that you're using those two ideas as a backdrop?
Yeah. Well, a couple things that are observable. One is earnings growth is picking up this year, not just in the U.S., but globally.
Yeah.
That's not usually late cycle.
Okay.
And market breadth has improved a lot.
Okay.
This year, someone said it's like a rolling risk appetite cycle, but a lot of things are going up that means the market's broadening. Actually, it's also broadening outside the U.S.
Yeah.
And then the third thing is there's arguably reasons to be optimistic incrementally, whether it's AI or blockchain. I think, especially coming out of Davos, when I didn't go to Davos, but I was following a lot of the reports and the panels. It's clear to me traditional financial institutions are starting to build on blockchain as a productivity driver. That's a big story in the U.S. especially.
Fidelity just announced their stablecoin. It's huge.
Yeah. That's right. And then today, the SEC and CFTC had a joint announcement. They want to make sure the U.S. is the crypto capital of the world.
Yeah.
And then there's onshoring happening kind of everywhere and defense. So there's things that are driving global spending.
Materials rallies tend to be late cycle. And I would argue the biggest bull market right now, in the United States at least, and maybe this is true in other places overseas, is energy stocks, gold miners, the base metals are rallying, and all those related companies. I talked about a steel stock today as part of best stocks in the market. Like, when was the last time a steel stock was one of the best stocks in the market? And yet here we are, there are multiple. So, like, how do you square those two ideas?
Yep.
Or do you not agree that metals and oil rallying are late cycle? Do you think that's more mid-cycle?
I mean, one, the precious metals move is probably the trade, right? Like
Yeah.
silver and gold are like, if I was just an average investor, that trade has been working like every day and for
Yeah.
weeks on end. So it makes sense. People are investing and they're astounding. And I talked to Tom DeMark today about that. He does think there's still room for that to extend.
Gold,
He doesn't think it's exhausted yet.
No, he thinks gold can get to 8,900.
oh my God.
Per ounce.
This is the best.
Nobody's ready for that.
This is the best month since 2008.
Yeah.
Unbelievable.
I'm pretty sure at 8,900, the Fed's balance sheet like dramatically improves, or the U.S. Treasury, because we own so much gold.
But the thing is, who is left to buy it at 8,900? Who's the next buyer? Like, at that point, I guess what I'm asking is, to get to 8,900, you would assume every central bank that's got the wherewithal to buy has at that point already bought. Or do I not understand how it works?
It might be asset allocation, because I had a brief conversation with Joyce Chang from JP Morgan.
Yeah,
She's
hang on. Let me just pick up all these names you're dropping. So, all right, go ahead. I'm kidding. I'm teasing. Go ahead.
Oh, well, yeah, she was saying if you just do high net worth, 0.5% allocation
Right.
incrementally into gold, now you're at 9,000.
Wow.
So it's just small amounts of money moving into precious metals that could get us there.
Okay. Is gold similar to the stock market, where we should expect V-shaped recoveries there because the primary trend is so powerful? Or could you envision a scenario where like a 15% drop in gold and a 25% drop in silver puts an end to the rally that we've been in? Like, what would be your instinct if you saw a correction in these trades? And by the way, if both those two things happen, they would both still be in intermediate and long-term uptrends. But like, how would you look at an event like that?
I mean, today's kind of a snapshot, right? Today there was a big intraday decline in gold, and now it's like down 1%. And silver had a huge intraday decline, and it's like barely down.
The buyers just came flooding in.
Yeah.
Okay.
And then someone's telling me, I'm not a commodity expert, but now I'm like learning a lot on the fly. But like the physical market's even tighter, so the prices are actually higher in the physical than in these financial markets.
Okay.
And I'm going to quote Tom DeMark. He says this looks more like 79.80. So then it might be a topping process.
Okay. I mean, it's sort of parabolic, and
No, it is parabolic.
it is.
Yeah, it's
Silver
going straight
definitely is. I guess what I would ask you is, can you think of a historical example where gold and silver were doing this, and the stock market was rallying right alongside of them? It seems like it's rare. Like, the bull market for stocks didn't start in the early 80s until after gold and silver were destroyed. This is a little bit different. Looks more like an everything rally.
Yeah. I mean, someone pointed out, and I think it's correct, that, and again, we're not really sure exactly why, but if someone said this is everything but the dollar, then maybe it makes sense.
Yeah. Okay.
Got two charts for you on this. First comes from our friend Todd Swan. We are looking at precious metal ETFs daily trading volume.
That's a great graphic from Todd.
Todd calls it metal.
He does great work.
Metal mania. The previous spikes got like maybe up to 20 billion, and we're now at $64 billion. So people are going absolutely mental about this. And then our friend Warren Pies has a chart showing gold secular bull markets. And the first bull he poses, which is the real crazy one, 1971 to 1980. Then we have the second one. He marks that from 1999 to 2011. That's the purple one. And today, the green one, 2018 to 2026. So
Shorter and sharper than the last one.
Yeah.
Okay.
Yeah. By the way, if you do like Wall Street Bets most talked about stocks, it's SLV and GLD.
unbelievable.
I'm not surprised by that at all.
No, unbelievable where we are.
Yeah.
So Tom, one of the narratives going into 2025 that has cooled off dramatically is bubble and everything, especially the AI bubble. You don't hear much about that anymore. Oracle is in a 51% drawdown, like 51%, got cut in half. Microsoft is down 12% today. And then just the broader market, you have a great chart. John, chart 4, please, showing that we've had 6 black swans. Black swans might be extreme, but whatever. 6 like events in the market since, when does this go back to? What year is that?
19.
Yeah, the end of 2019.
Okay, and the PE has gone sideways.
But what are these events?
Where's the bubble?
COVID shutdown,
The supply
chain, inflation, fastest Fed hikes in history, tariffs, USA bombs Iran.
Yeah, there's been some shit.
So some stuff has happened. And I don't know, what's the message of the chart? What are you showing people when you show valuation alongside of those events?
If this was a company and we threw 6 events that should wipe out the earnings power of that company, but the company grew earnings, we would consider it super resilient and re-rate it to a higher multiple.
That's a great point.
Yeah.
Right. You'd be willing to pay more for that asset, for the earnings of that asset.
Yeah, because it's indestructible.
Yeah.
And so today when people say the market's expensive, I kind of think we just threw 6 black swans at it and it's still the same PE.
Do you think the stock market's indestructible? I know not forever, but like, is that how you feel?
It is acting more indestructible than many people appreciate.
For sure.
Because people don't tell me they think it's indestructible.
No, because who would say that out loud? It sounds crazy.
Yeah.
Somebody said to me that they can't understand. They're not like professional investor, but they have money in the market. They're just like, I can't understand how it feels like the country, like the social fabric of the country is being torn apart and the stock market keeps going up. And my response was like, yeah, because people have more faith in Tim Cook than they have in Congress. It's what you're saying is not only not incongruous, it actually explains people have more faith in the earnings power of American companies than they have faith in any of our elected officials.
Yeah.
And that's why they'd rather have their money in stocks than in a lot of other types of things that they could be doing.
Yeah.
I think there's a lot of truth to that. What do you think?
I agree. I remembered about 10 years ago coming across a survey where it was millennials who were much younger back then have more trust in tech companies than the government. So they're willing to share more information with the tech industry than with the government.
Yeah, good bet. All right, let's get into Tom's outlook.
Well, one of the dynamics that I love about the market today is that the market is separating the wheat from the chaff, and it's the winners and the losers are diverging. So in over the years, tech has been one trade, right? Like they've all gone up together, they've all gone down together, and now, not just now, over the last 6 months, John, chart 5, please, you see the big tech correlation. So we're looking at it, the rolling 6 months, and it's crashing. So like today's a great example. Next one, John. You have Microsoft down 12, Meta up 10. These names generally, obviously, move in the same direction. We've literally never seen a day like today. And it's funny because they both reported yesterday, same story, CapEx. Maybe the market is spooked that Microsoft's 45% of their outstanding orders are tethered to OpenAI. It's like, that's a big question mark. But their spending is up 66%. Meta's is doubled from year over year. But Meta is showing monetization in Reels, and the market is speaking.
Yeah. I mean, I hear people parsing the reasons why they're afraid of Microsoft, right? Whether it's the value of the future revenue book, or whether it's because AI can redo Excel and Teams and a lot of the products. I think maybe it just shows you people are still trying to figure out how AI is progressing, because now they're just deciding that Microsoft's a loser in the AI race somehow. But I would probably guess it's misplaced. I mean, I think Microsoft's been written off in the past, in the pre-2000 era. People thought it was just a software company and it came roaring back.
Lost $400 billion in assets today. Now that money can come right back in tomorrow, so it's not like saying like a fund lost 400 billion in assets. But can we just pause for a second and think about that number? That is the market cap loss of Microsoft in one day. It's pretty remarkable,
Yeah.
right?
I think it's $1,000 per American citizen, right?
It must be, right?
Yeah, because there's 330 million
Yeah.
people. So
It's pretty remarkable. I want to get into your outlook, John. I can't see what slide. I think it's the first one. So walk us through what you're telling people they should expect in 2026.
I think it's a lot like 2025. Fundamental story's better. But one difference is instead of a hawkish Fed, we have a Fed that eventually the market will realize is dovish because we have a new Fed chair and they're also not inclined to hike anymore.
Yeah.
So that's a positive. But the negatives are there are some signs of stress in the economy now because of high rates, whether it's consumer or private credit. And we know valuations are more expensive because we have 3 years of gains behind us, back to back.
Right.
And I think that this is the year where we've seen more policy shocks coming. I think the White House is being more aggressive. I don't know if it's because they want to get things done before the midterm.
I would imagine that's part of it.
Yeah.
Right.
And so that makes it harder for people to hold things with conviction.
Okay.
So I think all of that means the market can look like last year, which we have a big drawdown. However, there is good news. You know, the rule of first 5 days, which is on the right side, on the tailwind side,
Yeah.
it came in positive,
Okay.
which is a good thing. But
The first 5 days were up.
positive,
in other words.
yes.
Okay.
But we just completed some additional work, and Matt Sermonero probably has like similar stats. But if the first week is positive and then the first month is positive, the probability of an up year jumps to like 92%.
Is that right?
Yeah.
I didn't know. I knew that was a thing. I didn't realize it was that extreme.
Some of that data sounds random, but like 92% is so strong.
And it's 75 years. So
Yeah.
and N of 75 is still a lot to look at.
Yeah.
Which years fell into the 8%? Just out of curiosity,
Yeah.
did you bother to look?
I haven't looked at
That's
it
in
yet.
the weeds, but
'Cause
that would
we're-
be interesting to
yeah.
see what threw it off. It could be like 9/11 or something.
Yeah.
Like it could be like an obvious thing
Or
that would have.
what if it's like 08 and 2000 and 74 or something.
Okay. You have a bunch of headwinds here, and for the people listening that aren't seeing the slide, I think it's worth sharing a couple of things. We got to the valuations are higher, obviously, because stocks have gone up. Low grade consumer stress in subprime and auto loans. We have been able to look through this, not on the individual company level. The stocks that cater to the lower income consumer have absolutely felt the pain of what's happening there. But for the most part, like Apple stock does not care about that. Like the big stocks that matter are looking right through it. Do you think that could be the source of the next correction? Is that there just becomes an overwhelming amount of evidence that there's too much struggle at the low end? Or do you think that that's a low probability thing to worry about?
I mean, it's probably one of those things where it's a social question because, it is a burden for consumers, like all this inflation.
Yeah.
And then it can create problems for government leaders. And so it can swing elections.
Yes.
But mathematically, the consumer, the lower 50% isn't as impactful to GDP as the upper half.
Right.
And I think that's why the market hasn't paid attention to that.
That hasn't been a stock market story. That's been a political story.
Yeah. But then it can become like a,
Right.
That's why we're capping government credit card rates.
At the way things are going, he's going to lose the House. And if he does, it'll be 80% because of the affordability crisis that the polls say is squarely being blamed on him. I'm not saying you should agree with that or not agree with it. I'm just saying that is what the polls are saying. And then maybe 20% immigration enforcement chaos. But like, to your point, that may not be a market story today, but a blue wave in the House would absolutely become a market story because part of the bull case right now is all the deregulation, which will obviously grind to a halt once they have to actually start voting on things.
Yeah, so that's
Okay.
why it makes sense, like capping healthcare rates, trying to get oil down, credit card fees capping. Like those are things that would help a lot of folks.
Well, also not to be the bearer of good news, and I'm not suggesting that the lower end consumer is on fire at all, but if a lot of those loans that are bad loans in the subprime auto market happened in 2022, and we're on the other side of that now. And if things were that bad, Ally Financial, which is the biggest lender to these consumers, the stock wouldn't be within, I don't know, 3% of a 52-week high.
Yeah.
Right?
And that's forward looking.
Like, come on. Like,
Yeah.
this is the truth.
You
Yeah.
have New York Stock Exchange margin debt at an all-time high. Michael and I would look at that, and we're not as smart as you, and we would just say, yes, that's usually what you see when the stock market's at an all-time high. Margin debt, just because it's a function of the overall size of the stock market capitalization. Are you, by adding that into your headwinds, are you implying that there could be something more to that?
Yeah, there is a little signal. So, and we'll probably start writing about it at
This
Fundstrat.
is margin debt. So 1.214, is that 1.2 trillion?
Yeah.
As of November 2025, and that obviously is a record high. And for context, in July of 2023, it was 710 billion. So it's almost a full double in 2.5 years.
Yeah.
Okay.
What's
What's the signal there?
What we found was if you look at the year-over-year change, it's actually positive for stocks until the percentage gain exceeds 38%.
The percentage gain of the margin debt itself.
Yeah.
We're there.
Yeah. It's at 36 right now. So it's almost there.
Okay.
Because what it means is like most of the gain is now being fueled by the consumption of leverage to drive the gains. So in that top deciles in the last 30 years, the forward returns go from 70% positivity to like 40%. So we're almost at the point where it might be a headwind.
So can I show you a chart from your protege? Chart goat, Matt. So I do like what you showed, which is like the amount of money coming in and the year-over-year change. So what I had Matt do was show me margin debt as a percentage of Russell 3000 market cap. And it's pretty low, but it's accelerating like in a meaningful way. Check this out. Right?
Yeah.
So historically low, or like nothing to be too concerned with, but look at that rate. Look at that change.
Expressed as a percentage, so it's 1.8%.
Yeah, so normalized for the overall market cap, but it's accelerating pretty violently.
Yeah, and that reflects a cohort of people because a lot of people don't use margin debt. And I don't think the Robinhood community uses margin debt. They're probably buying more zero-day trading options.
Oh, I would say they're doing both.
Okay, or maybe both. Yeah,
I would guess both.
Yeah, so when we think of it as a percentage of market cap, it's not necessarily representing like how the cohort is trading. So there's a cohort that's really employing this debt that they're exhausting their
So
firepower.
the 38% threshold, what happens then?
Well, so forward returns turn negative. So that's
For
would
the
be
whole stock market.
yeah. I mean, that would be the case for why there could be a drawdown to kind of reset everything.
Yeah.
So
if you get that drawdown and a lot of that margin debt comes out of the system and we normalize at a lower level, most people, yourself, myself included, would say, okay, great. We had the cleanse. Like you sort of need cleanses on the way toward higher prices. I don't even know that we would look at that as a headwind or a negative.
yeah. So for investors, drawdowns are good because everyone has a more ability to allocate at lower prices.
But what did you say, like always, John, chart 7, please, the correction is happening under the surface. So Oracle, as I mentioned, cut in half. This is the Mag 7. Microsoft's in a bear market. Tesla's 14. Apple's down 10. Like there's opportunities, whatever. Like things are happening.
Yeah.
And the market's broadening out. Like does the market not need Mag 7 for the next like higher?
Yeah. I mean, for me, if I'm an investor, and I didn't own Microsoft, they can buy it 22% cheaper.
Right. You could buy it at a lower valuation than at any time over the last 2 years. And all that premium from OpenAI, that's all gone. You could almost argue that's part of what's hurting the stock. I want to ask you about the software correction generally, not just Microsoft. So I think the IGV is in a 25% drawdown right now. And I don't know when the last time we've seen that, probably 22. Every one of those names looks like shit. From Workday to ServiceNow, Salesforce.com, like one after the other. Even the cybersecurity software names are down big.
Look at this, bear market. So this is the application software sub-industry.
So you have, and here's why I'm bringing this up. I think you're thinking about AI as a bull. You just told us it's wreaking havoc on the stock market right now. It's not the AI theme, if anything, is erasing market cap, not adding it, at least in software stocks. Now, I understand people are taking that money and buying utilities, and God bless them. But like, are we so sure that AI is a tailwind and not a headwind for investors?
Well, sometimes it's easier to see the losers and not the winners.
Okay. I agree with that.
Yeah, so software, I think, is now being chosen as a loser because now AI can write code and replace a lot of subscription services. And I don't know if you've seen the charts recently about tech employment, but it's actually declined. It's like one of the few industries where there's fewer people
Remember they
working.
said to everyone, learn to code?
Yeah.
Not great advice. Learn art history, it turns out.
Yeah.
Might be better advice.
Do you think the market is right to kill software like this?
Usually it's a signal, you know what I mean? Because there's been it's washed out when you have bad news and it doesn't go down. But if you have bad news and it's going down, that means
How about good news and it's getting, so ServiceNow had great earnings. Stock is mauled and it was already getting destroyed.
Okay, so that's also a bad
It's very
sign.
bearish.
If you go down on good news, it's a bad sign. Yeah.
I would argue the reaction of Microsoft relative to what they actually announced is a really bad sign because there was like nothing negative there. It was like slightly higher expenses, slightly lower Azure growth.
It was
But, like,
38%.
minuscule.
It was 38% was their guide in Azure, down from 39%.
Yeah.
And the market's like, all right, we'll take $400 billion, please. Thank you very much.
So that's like not I know it's anecdotal, but that's not good when one of the largest stocks in the market reports a quote unquote regular quarter
Yeah.
and they act like it's the end of the world. I take that as like a negative sign, obviously.
Yeah. And,
Okay.
I mean, I learned when I was an equity analyst, like there's like a 3-quarter rule. Like if a stock misses, you kind of can't touch it for 3 quarters or 2 or 3 quarters. So,
Okay.
but it's still an opportunity for a long-term investor.
Can we say that two things are true? The reaction of Microsoft today is not bullish. I mean, obviously, its stock down 12%. It didn't say anything terribly bad. The street is worried about its OpenAI exposure, to which I would say good. I love that there's no bubble, that investors are actively rejecting the AI bubble. Again, for the third time now, Oracle cut in half, Microsoft bear market.
Can't have a bubble if the biggest stocks are
So
cut in
just
half.
in terms of
Yeah.
building a wall of worry, I, as a long-term investor, love that people are being cautious and discerning about risk.
Yeah. And later this year, many of these will actually become listed. So now you don't have to guess what it's worth or what its impact would be. I mean, part of it is OpenAI is like a mysterious, like privately held, but now it'll be public. And then now it looks like SpaceX plus XAI will be public this year.
Right. So you'll remove some of the mystery and the people that want to affect trades on what they think those stocks are worth will be able to do that all day long.
Correct.
So
Aren't
you-
large
okay.
IPOs like, I don't know if historically is the right word. Isn't there something a little bit like, too much supply?
Yeah. Is
You
it a
agree
top
with that?
signal?
Yeah, of course.
I mean, it's going to suck up demand, right? Because it's a big amount of supply coming.
Yeah. So I'll never forget. I learned this lesson when Blackstone came public in 2007. They were like the quintessential play on booming real estate. And they were like very heavily involved in emerging markets, mostly China. Like they were like in all of the quote unquote hot areas. And this is before we were talking about liquid alts and, the revolution. This was just about like this style of investing is the best style of investing. And I think they bought equity office properties from Sam Zell at the top of the real estate market. I think if I remember correctly, that IPO was like a meteor or like an asteroid hitting the surface of the earth.
Yeah.
So when BX came public, first, it wasn't a corporation. It was a partnership, which meant if you were stupid enough to buy the stock for your clients, which I was, you got to tell them you just lost half your money and you have a K1. Like that's tell your account you have another K1. That's your gift at the end of this. But I've always looked at those giant IPOs that Michael's talking about, and I think OpenAI qualifies
And SpaceX.
not as the beginning of something, but as the end of
Yeah.
something.
Where does the money come from? It's hundreds of billions of dollars
Yeah.
potentially.
Well, yeah, but this might be different. Okay. And let me explain why. Like SpaceX, when it goes public, is actually a huge wealth creation event for many of the people who invested in SpaceX. I know some people who are seed in it, 50,000, and I think their stake's worth 150 million
That's
Oh
insane.
my God.
because the company's worth 1.5 trillion. So like,
Sounds inflationary.
well, I think that's the equivalent like of a massive tax refund for the U.S. economy.
Well, they have to wait 6 months they're locked up. They can't sell on the IPO date.
Yes, but they might be able to get margin, or they can
Oh
use
my God.
derivatives.
It could do an
We're
S block.
going so much higher. So you're saying that these people that get liquid from SpaceX shares, they're going to put it right back into the market and take out S blocks on
Yeah,
it.
so think of it as like the alternative world who said no return. Suddenly, all these venture funds that are
Yeah.
99% of the fund's value is SpaceX.
Waiting for
has
exits.
a huge distribution, and like
I like that.
so all that money going into the economy again.
So you're saying I should have Michael start cold calling the SpaceX
Yes.
seed investors.
yes,
Okay.
yeah, Ritholtz should actually do a pilgrimage to all the
we have very cheap credit.
Yeah.
Very
Yeah.
cheap.
All right, we did the January barometer. We did the FINRA margin cap. Where do you want to go next?
Let's do
strategy.
Let's do the broadening. John, chart 12, please. So it's Thursday. It's 3:40, and Microsoft got killed today, down 12%. What's XLK doing? Maybe that's not the bad. XLK is down 2%, but that's a bad weighting. The Nasdaq 100 is down 96 basis points. Okay, 96 basis points for the Nasdaq 100, and the RSP equal weight S&P is down 2 basis points on the day, flat. And this broadening trend that we're looking at. So this is a chart from Yuri and Timmer showing the equal weight versus the cap weight. And he showed that there was a clear narrowing earlier, late last year. And now it's broadening. So the S&P cap weight has turned sideways, and you're seeing a breakout in the 493. I love it. I think this, now listen, if the Mag 7 were really rolling over, I would say, all right, well, that's not good, right? Because they are the leaders. But the fact that they're going sideways and consolidating, Microsoft notwithstanding, I think this is as bullish as you could possibly be.
Is that part of your bull case for this year? Is that we'll have like the next 100 stocks up, making a play for new highs?
Yeah, and I think this is confirming a broadening is confirming a bull market. It's very good for institutional stock picking because
Right.
they can't own that much Mag 7.
Right.
And institutions can, of course, employ their own form of leverage through prime brokerage. So it means that you could actually have new dip buying coming from institutions. I think this would be really good news.
Your clients must love it. What are they asking you and saying about this?
Yeah, I think they are breathing a sigh of relief that it's not just the Mag 7 anymore.
Finally.
Yeah, and so people are seeing, especially the long short folks, seeing good opportunities. A lot of them are doing non-US. I think that if someone's global, I think I understand now why they are looking at global. Like, because there's now, as someone pointed out, there's going to be two countries that are winners in AI, like the US and China.
Do we know that?
Yeah, I mean, I think China's AI works really well, and China has done a good job on EVs, and then I learned recently they're actually pretty big on healthcare and biotech innovation. Like, I think they are exporting more licenses than any other country.
Okay.
So, like, a lot of the European drugs are actually licensed from Chinese labs. So then it means the supply chain, like the countries adjacent to China, could be doing better. So it's good for stock picking. I mean, so there's more stories out there.
I think the international story is so interesting because last year they did not have earnings growth, but those markets went up 20 and 30% because it was like a mindset shift. And I think a lot of the leadership in those countries and the people that run the stock exchanges, et cetera, some of them, it was just like jawboning, but some of them actually like passed rules, like forcing companies to increase shareholder value. I think they all sort of looked at the United States recovery from the pandemic and said, like, what are they doing that we're not doing? And I think all at once they kind of got the memo. Oh, their capital markets are on fire. And look at all the benefits, like the domino effect. When stock prices are rising, you get increased consumer demand for everything under the sun. You get you get executive confidence, you get more investment. It's just it seems so obvious. Even if you're a socialist country, you should root for your corporate champions to get bigger, not penalize them and find new ways to sue them. And I think that's the switch that flipped. And that led to that re-rating last year. And then this year, to your point, now you're going to get the earnings growth in these countries that explains the re-rating of last year. And that's a pretty great follow-through story. And I think that's why you're seeing people going out of their way to allocate more to international large caps. My best guess is that's not like a 6-month phenomenon. That feels multi-year to me. And I
Yeah.
don't think it's late in those markets at all. What do you think?
Yeah, I think the more I look at it, the more I think what you said makes sense, because then on top of that, there's dollar could be kind of weakening.
That could only help.
Yeah, so then
Yeah.
it could be there could be a long tail to that story. Now,
Yeah.
the more I look at it, the less I think it's just a 1 year thing.
Okay, I like that idea. I want to go to your strategy again. So, what to own? Stocks that benefit from a stronger 2026. John, do you have this?
Yep.
All right. Energy, basic materials. Is there more to say on energy?
Well, part of it is, so energy and basic materials were our top sector picks this year.
Yeah.
And I didn't anticipate precious metals to do so well, or the metals, but it was really because they had underperformed so long. The level of underperformance the last 3 years was something you've only seen one other time in the last 75 years.
On precious metals.
Yeah, so I think it might, well, I think I don't know where the slide is, but there's like what we have as Z-score, how much standard deviations of underperformance.
Yeah.
And it was at the same level you were at the 2000.
So you'd have to say the same thing
lows.
about energy then.
Yeah,
And
so,
energy has like done nothing for 5 years.
correct. So it was energy and basic materials. And that's
Okay.
why we made it our top sector pick this year.
Yeah, I think you're going to be right on that one. And those charts all look outstanding to me.
Yeah.
Like these stocks are under accumulation. I don't see any way around it.
Yeah.
I have a
Okay.
question for you guys. Why do we say basic materials? Like, why don't we just,
Because they're not precious. There's precious and there's base metal.
but why not just materials? I mean, I never say basic materials, but I know that's what the sector is called. It's kind of weird.
Wait, what do you mean?
Basic materials.
Yeah, that's the GICS one.
Yeah, oh, it's right. It's just how
classification
they classify
description.
all
I'm
those
saying
companies.
like, where'd basic come from? I don't know. Maybe we'll never know.
Yeah, you know why? I think they were thinking of it as a manufacturing process. Like, these are the basic materials, and then there's the interim
Specialized.
goods. Yeah,
Yeah, yeah.
and like industrial, it goes into the industrials. But you're right. No,
The more you know.
that's like an
That's a great
agrarian
explanation.
concept or something, right? Yeah.
You have Bitcoin and Ethereum, not surprisingly, as what to own.
Tom, what the hell is going on? Bitcoin is crashing today.
Can you tell us a little bit about the crypto market over the last 3 or 4 months? Because it was on fire, and like the story made sense. Like, all right, you have pro crypto administration in the White House. Now the SEC is on board. Now, like everything fell into place, and you had people on both sides of the aisle in Congress falling all over each other to collect money from the crypto lobby. And it just looked like, all right, finally, it's a regulated market. It's accepted. Products are rolling out. People are using it. Inflows are hitting the funds. And then it like hit a wall. And I don't like have theories or whatever. We had JC Peretz on last week, 2 weeks ago. He's just like, oh, this is easy. They started trading options on Bitcoin. That was the top, which I guess was someday in October. I don't know. What's your story for why it's been so directionless over the last few months?
Yeah, crypto was doing well until October.
So do you buy that story, the option story?
A few things happened in October.
Okay.
So crypto was actually up like 36%. And then from October to the end of the year, it actually had in some cases, like a 40% drawdown.
Yeah.
One was there was a big deleveraging. There was basically a pricing exploit that took place on one crypto exchange that led to what they call an automatic deleveraging. Then that cascaded across all the crypto exchange, and it was the biggest deleveraging event in the history of crypto, bigger than what happened with FTX after
So what
FTX
happened?
failed.
The people with leverage got unwound and they were forced out of longs, and it kind of wrecked the trend.
Correct, and it was a pricing error, but it liquidated over 2 million accounts globally. It wiped out, I think, a third of all market makers, which are important for they're the equivalent of central banks, and it crippled a lot of crypto exchanges. So their balance sheets took a huge hit.
Coinbase is in a 50% drawdown. I think it's second 50% drawdown since coming public. And Coinbase is a big company. So if that stock looks like that, you can only imagine the privately held players in the ecosystem, what that must have
That's
meant
right.
to them.
Yeah, so Coinbase, let's say, is a fortress balance sheet. Then imagine those who have like okay balance
All right.
sheets.
Okay. Has that run its course?
In 2022, it took about 8 to 12 weeks before risk appetite could recover. So we're like kind of in that outside window.
Well, Solana's hitting new lows today. So Bitcoin is down 6, ETH is down 7. It has not run its course. It might be accelerating to the downside.
Yeah.
But it's so weird with the like juxtaposed to gold. Like it was supposed to be
Digital gold.
Yeah. Well, there's other things happening. So like in Bitcoin, I think there is a turning of the holders because one of them is, Bitcoin's like 14 years old. So like the crypto punk, the 20-year-old is like becoming a mature person.
Right.
And many of them made fortunes.
Yeah.
So they've been selling their Bitcoin.
Okay.
And then as you know, there's this quantum risk that is more Bitcoin specific because quantum developments are accelerating.
Yes.
And about a third of Bitcoin wallets are not upgradable. So they're actually quantum vulnerable.
Okay.
Can I say a dumb question? I don't know anything about this, obviously. If quantum computing was a thing and we could hack the Bitcoin blockchain, why wouldn't they hack, I don't know, the central bank or everybody's Chase account? Like, why would they go after Bitcoin first?
So quantum operates more like an ASIC, like a brute force of a repetitive calculation. So it can break encryption. So Bitcoin's encryption is what can be broken. You're right. So you can break a lot of encryption, but banks hopefully would be upgrading all their customer passwords, force you to do a new type of password. And that's how you avoid quantum vulnerability. The thing is, like a lot of Bitcoin wallets like Satoshi's haven't ever been upgraded. And of course, Satoshi's wallets.
How do you upgrade a wallet to make it so that the blockchain itself, that vulnerability to quantum computing will be protected against?
You'd have to fork Bitcoin. I mean, or you have to contact the guy and say like, upgrade your wallet. And if it's like a Ledger wallet or whatever.
So, but I'm saying if you upgrade your wallet, you're safe, but the price might not be safe.
Well, if you
might be safe from losing your Bitcoin, but if there's a mass hacking event or there's some way that, and like Michael, not an expert, but if a lot of nodes just go away because they're worried about that risk, or if somebody influential comes out and says, I have information and I think like literally there's a quantum computer right now in the process of hacking the Bitcoin blockchain, like that, you could upgrade your wallet, but the price is going lower.
Well, one, if someone developed a quantum hack, they wouldn't reveal it. Like a nation state would just steal those 1/3 of the Bitcoins.
Until somebody starts to notice.
Yeah. Now, Ethereum, for instance, upgrades twice a year. So they're already developing quantum resistant. So like a lot of blockchains are going to be quantum resistant.
Okay.
Just the way like Chase will upgrade all their encryption.
Have you ever seen sentiment this bearish outside of FTX? Like people seem totally done. And I know crypto is so weird that it can get its mojo back in 2 seconds for no reason. Could be up 15% tomorrow for all I know. But man, it looks like it's on the mat. It is right at multi-month support. And it just looks pretty gnarly right now.
Yeah. So actually from a technical perspective, this is what Tom DeMark actually is expected. So he's been hired as an advisor at BitMine, and he actually told us Thursday was an important day. And it turns out today was an important day because we've had a big decline in crypto. But this is more akin to the end of the selling, not the beginning.
So you don't think that we're seeing another leg lower?
Well, for instance, Ethereum might go to 2,400, but it's a touch. And then that's the bottom. But that's going to coincide with precious metals peaking. I mean, remember, precious metals has sucked all the risk appetite out of speculation, out of crypto, right? A lot of it's come out of crypto into precious metals.
It's like unthinkable 6 months ago.
Yeah.
Nobody could have foreseen back then. We said nobody knows anything.
I have heard that story that the people trading crypto have moved over to gold and silver because it's working better. They're probably telling themselves that they're being conservative right now. But there's another story that I've also heard from crypto people, which is that if you thought Bitcoin was a store of value away from the dollar, now with the ready access to stable coins and the full acceptance in the banking world of stable coins and pending legislation that might even allow stable coins to earn interest, stablecoin holders to own, what purpose does Bitcoin serve? Like if we were using Bitcoin to get money out of fiat currency or get it out of the traditional financial system. Well, now Bitcoin is fully a part of the traditional financial system. That's number one. And two, it moves too much to be useful as a store of value. It's useful as a trading vehicle. Stablecoins are amazing as a store of value because it's $1 and it's always $1.
Yeah.
So did the advent and mass popularity of Circle and all of these stablecoins, now Fidelity launched one this week, did that steal some of the use case away from Bitcoin?
Well,
Have you heard that before? I know I'm not the first person to say that.
I have.
Okay.
But there is a really big story around blockchains, which is Wall Street dismissed blockchain and crypto as like just experiments. But now financial institutions are rebuilding settlement layers using blockchains. That's what Standard Chartered said at Davos. The UBS CEO says that in a few years, there's a convergence between digital assets and traditional finance because blockchains offer finality and a lot more security. And Larry Fink says he thinks that the entire financial system is going to operate on one common blockchain.
But why is that good for Bitcoin?
Well, it's probably good for Ethereum.
Okay.
Because Ethereum is
you wouldn't be talking your book now, would you, Tom?
I haven't written a book on
You're
that.
so good at this. All right, go ahead. Go ahead. Say more about Ethereum. So Ethereum's the useful blockchain that can actually help bring that sort of thing about.
Because that's really where stablecoins have been built. You do smart contracts so you can lock information and prevent it from actually being altered. You could put a 1,000,000-page legal document on the Ethereum blockchain. If someone tries to change a period on that blockchain, the hash fails.
Right.
So that's how you protect information.
Right.
It's 100% uptime. This is what Wall Street, as they think about the narrative around the future, is they're building their entire system on contracts like Ethereum, which is really bullish for Ethereum.
What is the timeline when you say they're building their entire system? I would say 99.99% of the whole financial system now has nothing to do with blockchain at all. In 10 years, is it 50% or is it 5%? Like, what would be the bull case on the financial rails of, let's just leave banking out of it. Let's just do Wall Street, for example. So trading, settlement, et cetera. How much of that is running on Ethereum rails, if any?
I might be able to give you a snapshot.
Okay,
So as we talk
I'd love
about
that.
Okay, so if we talk about stable coins, Tether has about 160 billion of US dollars tokenized on their, as Tether is a company.
Yes.
But it's mostly running on Ethereum. Even though it's only 168 billion, which is less than 1% of M1, so it's not even like risk assets, it's not credit equity tokenization.
Right.
They're going to make $20 billion this year. Actually, because of their balance sheet, they might be making like 24 billion.
And that's just the interest on the treasuries that they own to back the dollar value of the coin.
And because they're over collateralized, they actually own like now almost $30 billion worth of gold or something.
Oh, wow.
Right.
Okay.
But so let's say they make 20 billion, not 24, but somewhere between 20 and 24. They're a top 5 most profitable bank in the world.
It's amazing.
They make more money than Goldman or Morgan Stanley.
That's amazing.
And that's just a monoline product with 300 employees.
Okay. Now everybody is coming for that profit margin, as you know. At JP Morgan, Fidelity, everyone will have their own in-house stable coin because why on earth would they allow something like this to continue?
Yeah, what's better for the banks than a stable coin? I don't have to pay you anything? And we just have to keep it all?
Yeah.
Correct. Okay, and that's one product. So now you can build stock trading, which, Vlad and others want to tokenize stocks.
Nice, E10.
Not using ETH, though, right?
They'll use an L2.
Yeah.
They might try to use other chains. There's other chains, and some banks are using these privacy chains, which I'm not going to try to throw shade, but some have had exploits. Some have had famous exploits in other countries. So,
Okay.
But I'm not like,
Get mean, Tom.
I don't want to be suicided.
You think if they are tokenizing assets, you think if they're smart, they either build it on ETH in an existing L2 or they come up with a new protocol, but like that's the right world to build that.
Yeah. So let's say the Wall Street tries to do their own blockchain because they want to control the narrative. Then there's going to be a new JP Morgan that is like Tether that'll be built on the public chains, because Tether is built on public chains, and it's better than, JP Morgan has 300,000 employees. Tether is 300, and they make almost as much money as JP Morgan.
It's crazy.
Tom,
Okay.
I got to ask.
Um,
All right, stock market. Look at this candle for the close. Look at that bullish candle for SPY.
Wow.
Holy
Shit
shit.
buyers.
Is it a hammer?
I mean, dude,
I sort of like it.
near an all-time high. They can't even take it down for one day. It's a
Yeah,
bull market. I don't know what else to tell you.
You have Mark Newton in house?
we do.
Okay. So what is he telling you on the technicals right now?
He likes stocks in the interim, in the near term.
Okay.
He's also in the same camp that will have something that feels pretty bad sometime in the middle of this year.
Hold on, what's pretty bad? Because there's always a correction. Like you said earlier, you think bear market, you think we're going to get a 20?
Yeah, it could be 20, but from a higher level. Right. So let's say we're 7,300. I mean, that could be 1,400 points, right? So then 5,900 could be the low. I mean, that would be painful.
I want to do one more with you, and not specific to the stock, but when people ask me, all right, AI, everybody gets it, going to be huge. Companies are spending trillions of dollars. We all understand that. Like, what's the next leg to the bull market? My answer has been robots. I've been pretty clearly bullish on robots for 10 years now. Tesla last night told the street they're going to stop making Model X. They're going to stop making Model S. I think the models that really matter there now is like the Model 3 and the Y. That's like what they're really going to focus on. And then the Cybercab. But then the decision to stop making those cars is to focus full on autonomy, which is a fancy way of saying robotics. And he's talking about the humanoid robot being for sale to normal people by 2027. Now, we know he's usually 5 to 10 years early on his projections, but that's like part of the charm, I guess. But that's pretty notable that they're dropping 2 of their 4 top-selling cars just to make robots and to make automated vehicles. What are your thoughts on that as a signal? And do you think the robot thing is going to be the next phase of the bull market the way that I do?
Robots could be huge, right?
Not necessarily humanoid robot, but just the idea that autonomy is enough
Correct.
to be a new bull market that we're not even in yet.
Yeah, because robots are force multipliers. Like, it makes every human a superhuman. Or
unemployed, but sure.
yeah.
An unemployed superhuman.
Yeah. If robots pay taxes, then you still come out ahead.
Right.
Right? Because you might start taxing
The
robot
robot
activity.
makers at least will pay the taxes.
Yeah. Or,
Okay.
or the DoorDash robot pays taxes.
But you don't have this in your themes. Is it too early?
We do have a labor shortage as one of our investment themes.
Because they will use robots to supplant or to fill the hole.
Yes, there is a structural shortage of prime age workers that is going to be lasting for the next 10 years. So there's a use case for robots. But I agree with you. Like, that is a really big unlock, that in the real world, you have agentic robots moving around. That's very productive. Like, it could create a lot of GDP, but remember, it could generate so much tax revenue that the U.S. government doesn't have to tax people anymore. You might not even have to work.
Come on.
So that's
Yes.
So that's
No
what
more taxes?
Yeah. I think we could stop paying taxes because the robots are the ones that are taxed.
And then what? How do
Wait.
we
then
fund?
people may not even work then, because there's so much surplus generated by the robots.
Robots pay taxes.
Yeah. You tax their activity. It's micro taxing. But you would need a blockchain.
You are living in the future, my friend. I love it.
You're not at all in any way pessimistic about.
We'll be the animals. Like, we'll be the people. The robots visit us in the zoo. We're just like sitting.
You're not in any way pessimistic about the combination of AI and robotics. So physical AI, like the number one occupation for men in the United States, like job title, is driver. This is not about the future. This is right this second. Like, I understand it's the greater good and it'll be cheaper, better for consumers, like the cost per mile. I'm all in. But I am worried about like the in-between once everybody gets used to that. And that could be, I don't know, couldn't that be decades? That's what we're seeing in the software stocks right now. Like, you're not at all pessimistic that like we might need a pretty vicious economic down cycle to get to that other side because a lot of people are going to get laid off all at once?
I think the U.S. is going to come out certainly as a winner, and China.
Okay.
So I think like every American today is going to benefit from the surplus generated by robots.
You do?
Yeah.
Okay.
But I'll give you an example. Like in 1935, before the advent of flash frozen, okay, 30% of Americans worked on a farm.
Right.
But and food, food spoilage on the supply chain meant you produced a lot of food, but like it spoiled. And so they were
It
frozen.
couldn't go far. It couldn't get that far.
And most grocery aisles were like fresh.
Yeah.
Within 20 years, flash frozen allowed food to go from 20% of the wallet to 5%. And it went and took farming employment from 30% to 5%. So if you were an economist in 1935 and said, in the next 20 years, 90% of all farming jobs are going to disappear because of this technology.
That would have sounded scary.
Yeah, people said like, oh, it's another depression. But instead it led to a boom.
There's a great Steinbeck novel, East of Eden.
Love that book.
And they're farmers. And then toward the end of the book, they get into flash frozen. And actually refrigerated train cars, I think, is a big like plot point there.
Yeah.
Because it takes place in that era that you're describing. Made me think of it.
Yeah, so that's like robots, because that's 25% of the entire
So you're not worried
workforce.
about these adjustments between now and then and people wandering around for 5 years before they feel the benefit of the surplus? Because right now, Tom, a lot of the benefit of all these things seems to be going to the top 50% of households. The bottom 50 don't have equity. And I feel like that's the same thing, but on steroids. Where can we tell people to go if they want to subscribe to Fundstrat? The best URLs to send people to.
Okay. If they're interested in getting our research, which is almost daily videos and notes, it's fsinsight.com, like F like Fundstrat.
fsinsight.com. Awesome. I love what you're doing. And congratulations on all your success. And just thanks for hanging out with us. We love seeing you. And we'd love to have you back at some point this year.
Yeah.
All right.
This is my... First of all, you guys have the best conference.
Oh, thank you.
Looking forward to Future Proof in Miami.
All right.
Yeah.
Oh, yeah.
Can't wait.
Awesome.
Wait, you're about to say something else nice. Keep going.
Yeah, no.
Yeah.
Did you have one more nice thing that you want to say?
Okay, you guys, you also have a great podcast because I like listening to your voices. Like I don't have to watch you guys talk. I can just listen.
We appreciate that.
Amazing.
And we'll see you again soon. Ladies and gentlemen, thank you so much for watching. Thank you for listening. Check out Fundstrat and Granny Shots. And remember, if you like the show and you want to tell people about it and help the algorithm, throw a like on that. Maybe do even like a review is good, right, Duncan? Reviews help?
We love that.
Why do the reviews help? People don't understand this.
It just gives people details about why they might like the podcast.
Right.
That's it?
That's all you got for me?
I mean, it's important. Do it.
You didn't have a monologue prepared about comments? All right. We'll let you off the hook. All right, guys. We'll see you next week. Thanks so much.